Recession, bear market, well, U.S. markets have been flirting with those levels, but we might be seeing signs that we're pushing into more positive market territory. ABC7 financial contributor and investment advisor Brian Mirau of Mirau Capital is here to talk us through it today. Brian, thanks for coming on as always. When we have a down economy, you see headlines about corrections, bear markets, recessions. What is the difference between those market scenarios?
Well, Mark, thanks for having me today. Well, a correction occurs when the market declines at least 10% from its peak, but not more than 20%. And a recession is a period of time when economic activity, as measured by GDP, declines for 2 consecutive quarters. But a recession has different meanings depending upon who you ask. And a bear market occurs when the market declines at least 20% from its peak. Now, the average bear market lasts about 9.6 months, and since 1928, the S&P 500 has experienced 26 bear markets.
So what is your advice for investors in the market right now?
Well, first of all, don't panic. You want to make sure that your investments are balanced and they line up with your risk tolerance. And if you have not done a risk assessment, you need to do that. You want to maintain a long-term perspective with your investments rather than constantly reacting to the ups and downs of the market. It's very important to remember that the proper financial architecture is critical in the preparation of a solid retirement game plan. And you don't want to get emotional. We have to tell ourselves not to get excited when the markets go up, or do we not want to get nervous when the markets go down? You only experience a loss of a down market when you sell. And historically, the markets recover from a downturn like we're seeing right now. And we must remember the importance of balance inside your portfolio. If you have proper balance, you can weather the storm of a down market.
Now, Brian, what about people not currently in the stock market or who may be sitting on the sidelines due to all this current volatility? What should they do?
Well, Mark, we still have to stay in front of inflation and have an opportunity for a reasonable rate of return. There are financial vehicles out there that give us the opportunity for a reasonable rate of return and still provide downside protection. This is something we help our clients with all the time.
What goes into creating a retirement income strategy to help protect against a down economy?
Well, Mark, there's a few things you want to consider. First of all, you want to assess your income needs for the long run, including your housing costs, your daily living expenses, taxes, and health care. You want to rebalance or reposition your portfolio if needed. You want to make sure that you have a proper withdrawal strategy for taking money out of your retirement savings. And some of you may have plans of leaving a legacy or an inheritance. Mark, today we're offering at no cost and no obligation retirement income and risk analysis to help our viewers. This will help figure out how much you're going to need to achieve the retirement that you've been dreaming about. This will also help uncover the main risk posing a threat to your retirement, including inflation, stock market volatility, potential tax increases, and skyrocketing healthcare costs. You can give us a call at 888-668-9327 and ask for your retirement income analysis. And you can also access the Will a Recession Rob Your Retirement Guide? Both of them are available on our website at www.mirocapital.com/TV.
ABC7 financial contributor Brian Mirau, thank you so much for joining me.
Mark, thank you for having me today.